I'm Clara, an investment manager in the London Patria office, and today I have the pleasure to speak to Haresh, our technology expert.
Thank you, Clara. Delighted to be here.
Thank you. So, Haresh, why is technology so important to us as investors that Patria actually dedicated a specialist team to this vertical?
Yeah, when we look at these, when we shortlist sectors that we want to focus on, we look at the size of the opportunity that lies ahead of us, how fast is that segment growing, and what risks do we need to take to address that opportunity. I think when we look at those segments, we found technology as a very key or interesting segment to be in, and that's why I decided to build a broad team, but also build expertise in that segment.
And what would you say are the key trends and developments currently within the space that we should be aware of?
So there's a lot of dynamism in this space. There's a lot that's changing. AI, for example, is a big word that we hear time and again. But also, I think when we look at technology, I think it touches everybody in different ways. And technology in itself is, if you look at, for example, a physicist looking at the world in a very different way. For the physicist, the entire world is all about physics. Like he's looking at quantum computing, he's looking at it from a physics perspective. For us, we're looking at from an investment or a technology perspective. If you look at trade wars today, for example, we could look at it as trade wars are happening, or trade wars could happen or would happen because of technology in some sense. If you look at DeepSeek and OpenAI, the competition between US and China, I think a lot of that could be addressed towards technology as well, or access to rare minerals, where you need these minerals to build semiconductors, for example. So a lot of technology is interlinked with what we see as macroeconomic changes as well.
Right. And when we're talking about technology, what basically is quite a broad term. Which subsectors are the most active ones or the most attractive ones currently?
So I think again, it's a broad segment. Different players play in different segments of the market, and they do quite well with it. The ones that we look at as the most attractive sort of risk and reward is segments that are established enough where we can find big market opportunities, and we have people with that particular expertise. So we have done investments in the past in software, fintech, and e-commerce. Those we think are the sort of best verticals that we have invested in. You yourself come with a lot of software expertise. So having that balance of the right mix of expertise, the right understanding of the opportunity, and the right risk reward makes us play in these segments. And we keep dabbling and we keep adding new weapons to our armor in some sense. But it's all a sort of trade-off, because we want to address the right risk and the reward, and we want to deliver what we have promised to our investors.
And before we delve deeper into some aspects of investing into technology, could you maybe give us a bit more background about Patria's expertise in it and its actual performance in the space?
Yeah, Patria has been around this space for more than 20 years now. We have more than 100 investments. We've deployed more than $2 billion in this space now. So it's quite deep, it's quite broad, as you know. It's a lot of it has been in software, but also sort of wider segments of the market. We've delivered more than 20% IRR for our investors with a strong DPI. So I would say we've got a pretty strong positioning in the market overall in this segment.
Yeah, and how you described it is a very dynamic, a competitive and hot space. How does Patria actually access then those opportunities that are the most promising ones?
So as you know, our business is across three different verticals. So primary investment into funds, co-investment alongside our GPs, and secondary investment. And so as a business, Patria looks at the best opportunity to access a company. And for us, if we like a company, if we like a sector, if we like the trends, if we like the management, we try and find the best way for us to access that company. So it could be via primary investment with a GP, it could be a co-investment with a GP, or us trying to go and buy a secondary, either in a fund or in a company, to access this interesting investment opportunity. So there are various ways for us to access the same company. And the thing that we're trying to solve for is what's the best valuation that we can get into, what's the best governance, or what's the best impact that we can have on this company.
Right. So you laid out a multitude of ways where we as a team can actually access these opportunities. In terms of track record, how does Patria actually perform with following the strategy that you just presented?
So we've been investing in technology for over 2 decades now. So we've got a pretty long-standing and balanced track record where we invested in across 100 companies. We've got a strong DPI across those companies as well. We've invested about $2 billion in this segment, and our track record is about 20% IRR. And I think the interesting thing to point out is that a lot of those returns are being driven by stable investments. We're not taking unnecessary risks to get to that IRR. Our loss ratios are quite low. And I think that's the interesting part about this industry. If you look at software, for example, as you know, that there is a lot of visibility into how long your customers are going to stay. You can look at a lot of metrics in this industry to govern the sort of risk that you're taking, and you can balance those two to get the right sort of optimal mix of what you want as a risk and reward for your investors.
How does Patria act as a partner to the GPs, and how does it help to have a sector specialist team during the actual value creation part that takes place in the investment period?
Yeah, I think for the GPs, they look at it as a massive positive because they're talking to a counterparty who understands them, who is able to move faster because of this understanding and build conviction much faster. So we tend to be a partner to the GPs. We co-underwrite deals as well, which means that we are lock in step with them in every stage of the deal, as opposed to coming right at the end of it as a syndicate partner. So we become a partner to the GP, like a proper partner, as opposed to a sleeping partner, which makes it quite interesting for us. And I think the other aspect is that by having this direct business in Latin America allows us to offer them this opportunity to tap into this expertise as well. For example, we've got operating partners looking at cloud strategy for software companies. For example, we've got this company called Doc Planner, which is a healthcare software company, which has a big presence in Latin America. So we've got different parts of the business that accesses these expertise in some way or the other. And I think we can act as a real partner for our GPs as well.
Sounds great. So we actually focusing on more mature businesses that already have like an established customer base, which is one aspect that is very relevant. And you already also pointed out to some other aspects to have some certain downside risk protection. But how should I think about leverage? Which role does leverage play into this type of deals?
So when we look at these investments, it's a broader spectrum of looking at growth investments and buyout investments. And within that spectrum, we can control what sort of comes as a risk and reward. Again, sort of going back to the first principles is in terms of growth, most of the value creation comes from the growth in the company itself. In terms of buyout, it's a mix of leverage and growth. But because this segment itself is growing at early teens CAGR, it allows us not to rely a lot on leverage to determine our returns. And our business is sort of split across three verticals. Between the sort of growth and the buyout, we've got bootstrapped vertical as well, which we think is a quite interesting risk reward again. So I think there are different ways to access it. We do rely on leverage. It's attractive to get those returns. But again, if you're not taking too much risk to deliver those returns, it becomes quite an interesting aspect.
Thank you. So before we delve deeper into some of these aspects, could you give us some more background about Patria's expertise and performance within the tech space?
Patria has been investing in this segment for over 20 years now. Our part of the business focuses on the mid-market side of things. We're looking at investments across Europe and US. And when we look at these investments, we're trying to access the best sort of risk reward. And in that, we've completed about 100 investments in this space. It ranges from growth to buyouts. It's a wider spectrum of investments. And our track record over deploying this about $2 billion, we've delivered about 20% IRR to our investors with a strong DPI as well.
Sounds great. And maybe you could also give us a bit info about yourself and our excitement as a team about tech, maybe.
Yeah, I mean, we've worked together on a lot of investments now, Clara. So I think it's quite exciting for us, and I think it for everybody, it's different triggers, different elements that excite them about investing in technology. For me, a couple of triggers that I see as an individual were as a child when this is probably 30 years ago now, when I got the first PC, and it was my dad's business computer, so I wasn't supposed to fiddle with it, but I did fiddle with it. And over the sort of following years, we used to have games on floppy disks at the time. We were playing in BASIC and DOS and Pascal. So it's a completely different way of developing. And the second trigger was when I was out of college into my first job in the engineering space, and I came up with an idea to build a solution in project management space, which I then built, patented it, built a software around it, and then used it. And I think those two triggers for me were the biggest factors that got me really excited and interested in this segment. And the last 11 years in this business has been a pretty exciting time. And when we work on investments, it's pretty exciting for us, isn't it? When we look at these investments, it's always exciting to meet a new founder, to meet a new company, to learn something new about this space.
Absolutely. And what I personally find the most exciting aspect of it is that technology impacts so many areas that you wouldn't expect in the first place. But maybe it's worth mentioning, as a term, technology is quite broad, but what subsectors are relevant for Patria and that we are probably most active in? Is it only software, or within software, are there special areas that you would like to highlight?
Yeah, it's a very broad space, and as you know, we sort of try to dabble or try to enter new segments as well. But new segments come with certain risks that are associated with it. So we are trying to access verticals which have been stable, which have been around for a while, but also have access in the mid-market segment. So when we're looking at these sectors that are stable, that are still growing, we have sort of shortlisted software, e-commerce, and fintech as the key segments that we want to focus on over the sort of coming years. And that's where our track record has been strong as well.
Okay, yeah, I agree. So you laid out a lot of very interesting opportunities and varieties that are in the market, but I also assume the space is very dynamic and that comes with quite a lot of competitive environment as well. How does Patria actually access the opportunities that we would consider being attractive?
Yeah, I think our business is very symbiotic in having a primary, a co-investment, and a secondary element to it. And playing in the mid-market space, we're also narrowing it a little bit. So when we're looking at these investment opportunities, we're accessing these companies either through a primary investment or a co-investment or a secondary. And what that does is it allows us to access the same company in multiple ways, and which basically boils down to us saying, is this the right valuation, or should we enter it through a secondary where we can actually go in at a discount, for example. So having those various ways to access the same company by having a different balance of price, governance, and impact, we're able to access this company at the right valuation, which obviously delivers the best returns for our investors as well.
That sounds very interesting, that we have many angles that we can actually access a specific opportunity. How should we think about risk and leverage in these types of deals?
So we do use leverage in our companies. Mid market compared to large cap requires less leverage in itself. It's a smaller company. You've got more visibility on EBITDA. EBITDA is growing. There's more operational leverage coming in the business as well. And because we're investing from growth to buyout stage, it's a pretty dynamic way of looking at leverage as well. The returns generated on the growth side through leverage is, or the value creation is quite low because we don't need a lot of the value creation comes from growth in itself. Whereas on the slightly other side of it, on the buyout side, you do need leverage because it's boosting returns. But the way we look at it is that leverage plays a very small part in the overall value creation for a company or the returns for our investment. So it is there on the buyout side of things, but it is quite limited. And we try and control it to make sure that we are not over leveraging a company or we're impacting the performance of the company by putting too much leverage on it.
That's very interesting. And now we touched on the part of the investment cycle where we discussed how to access the investments, the value creation aspect, but obviously the exit environment plays a big role into it as well. What's your view on the current exit environment in the market?
Yeah, it's not easy. The market environment has changed quite a bit from what it was 2 years ago, and it does give you a flavor though. I mean, if you're in the mid market space, you're still able to exit these companies either to a larger sponsor or to or so financial or strategic. We are still seeing exits in our portfolio companies. In fact, we've got a couple of big ones lined up for the next couple of quarters, as you know. So
Okay.
so it's hard, but the way we would see it is it's more plausible in the sort of mid market side of things. And the other thing is by doing secondaries, you're also coming slightly later in the stage of a company's sort of life cycle in a way. And so you could actually go into a company later in its life cycle, enter in year 4 of the investment for the GP such that you get some sort of exit in the next couple of years. So I think it's a balance of how we can use different strategies to balance out the exits as well and the cash flows as well. And again, I think from our secondary fund, if you look at it again, which has access to our technology, vertical as well, the performance has been excellent on DPI. I mean, we ranked top quartile. And again, it's a mix of knowing this sector, understanding this sector extremely well, but also delivering the best opportunities by primary, secondaries, or co-investment as we can.
You mentioned one buzzword in the beginning, actually, AI. This is omnipresent at the moment now, ranging from big data in healthcare tech verticals to industrial tech for automating tasks, and even in cybersecurity, arising new vulnerabilities as well as, of course, opportunities. Are there any aspects to AI that you would like to highlight or that are probably less obvious but very relevant from an investor point of view?
I mean, AI is there is an advancement in AI and there's a disruption in AI. And I think today what we're seeing with our business is the advancement in AI perspective, or at least the segment that we are investing in is probably more advancement in AI than disruption in AI. Given that we're focusing on growth and buyout, we don't have enough businesses out there that offer good investment opportunity. For example, the sort of large language models are still being evaluated. We still don't know. We debated that the other day. We still don't know which is the best model to go for, because the evolution keeps happening. We saw that with DeepSeek when it came out a few weeks ago now, that the market environment keeps changing. And so the way we look at AI is how can we generate more leverage in our business? How can we improve processes in our business through AI? So, for example, one of our companies has put in AI in the sort of services aspect of it by increasing margins now because they don't need as much manual work compared to before. So there's sort of aspect of advancement which we are already capturing, and I think it's an opportunity and a risk because a portfolio company of ours that is not using AI has a big risk to it as well because they get left behind. So it's a mix of both, and I think today we are focusing more on the advancement side of thing. There will be a time when the sort of disruption will happen in a big way, but at least today we're not seeing that in the market, particularly on the enterprise side of things. I think for a retail investor or retail sort of user, ChatGPT was a massive breakthrough, but even today using it for enterprise is hard.
Okay, great. Thank you, Haresh. How does Patria actually differentiate as a platform from other investors?
Yeah, I think having a dedicated team for technology has been a big part of it. For example, you coming from the direct investment side into this team, or having Gabriel, who's also investing in technology, having that kind of a team differentiates us with the GPs. That way, we are able to source better, we are able to analyze better, and we are able to move faster with higher conviction. And which means that in the market, it is definitely differentiated. Not a lot of our competitors have verticalized strategies, so it does differentiate us a lot in the market. And it also gives us a good positioning with the GPs because we're moving faster, we're going with more conviction early on.
Yes, which also obviously stems from the fact that we are used to analyzing the data that's underlying the investment decisions in a tech lens.
Yeah, exactly. And having 20 years of that data is extremely crucial in being able to assess these opportunities.
So lastly, how did investing in tech change over the last decade, basically with AI and the other aspects that you mentioned?
Yeah, I think investing in technology has evolved a lot, as you know. I think the way we assess companies today is very different from how the companies were assessed 5 or 10 years ago. As a parallel, if you look at marketing and what marketing was 20 years ago, it was more about branding, whereas today it's changed and it's a lot about metrics. There's an element of art and science in both, which is true for investing as well. Like marketing is a lot about SEO, SEM, performance management. Now, to the same extent, we're trying to assess the art and science part of it in a deal, and we try and push a lot of the assessment towards the science part. We do want the art side of things. On the science part, I think we're looking at revenue, for example. We're looking at metrics such as gross and net retention, the net churn. We're looking at sales metrics such as magic numbers. So we try and push as much as we can towards the science part of things. We do need the art part. We do want to back the best companies that we think have long-term prospects to grow 10, 15 years. Even though we might hold a company for 5 years, we do look at it as a long-term holding opportunity for us. So it's an interesting balance for two, and I think over time the market has changed, and we have changed as well in terms of how we assess these companies. So I think that's the sort of biggest change in play from our perspective.
Great. So my key takeaway of today's conversation definitely is that the mid-market is still very active in the technology space, and changes that arise from AI and other topics are definitely very exciting, and I look forward to tackle the opportunities that arise from it.
Great. Thank you very much, Clara. Delighted and look forward to making many more investments together.
Thank you so much for your time, Haresh. Thank you.